All right, everybody, welcome back to another YouTube video. Today, this one is not a part of the series that we are doing from the beginning to profitable series. Today, we are going to be doing a little spin-off. I'm going to talk about my strategy with trading. Now, this is something that I have gained over 6 years of time. This is something that I found about a year and a half into my trading, and this is something that I want to put out for you guys to be able to see exactly how, when, and why I trade. Remember, this is all free. You can find all of my stuff on free, but if you want any more, all you have to do is go to the Discord, which is located at discord.gg/leverage in the 1% Academy. That is what we do. We have over 300 members who are profitable so far, and we're still counting. So we will continue to keep helping out those people with their trading, with their schemes. You can trade any way you want again, but the main point at the end of the day is psychology. Strategy is going to be great for you, but again, that is only 10% of what makes a profitable trader. Now, to first understand what institutional concepts are, we must break it down from the beginning. On the left here, you can see every part of the institutional concepts that I personally use for myself to allow me to understand and read the market and use that to be able to get in and out of trades. But we must understand what are institutional concepts to begin with. Now, what this is going to mean is that there is a theory that one entity slash algorithm is going to control your price. Now, what that means is there is institutional money out there, people with bunches and bunches and bunches of money that do not have a buyer for their seller. Now, what do I mean when I say that? Now, when I say this, this means that if they do not have a buyer for their seller, they have to become it themselves. Imagine you have a product, right? And you own that market for that product. Now, you do not have a buyer because your product is super, super highly priced. So, in order to make profit off of that, you are going to have to sell that product to yourself, create demand for it within the market, and then that will allow you to be able to profit off of your own product. Now, there can be a lot more that go into how that actually works as far as the economics go, but that is not needed, right? We must understand that our only job is to follow the big money. So we'll follow the whales, we'll follow the footprints using our retail methodology. I say retail as we are not actually moving price ourselves, right? We are on TradingView trying to figure out how the markets are moving on our own. So we're going to use that based off of these strategic things that we can see right here. These are theories that we can use as well as drawings that we can show up as well. But we must understand at the end of the day, the market is not going to move based off of boxes and lines. The market will move instead based on the big institutional money. So all we have to do is follow them, see their footprints, see how they create price, and then from there we can allow ourselves to read it, follow along with them, and profit with them as well. So let's go ahead and get right into each of these theories. We'll break them down a little bit, and then that will allow us to understand a little bit more of what I do. All right, so the first one that we are going to go over is going to be Wyckoff. Now, I want it to be Wyckoff due to the fact as this is a theory, an ideology, a perspective of how to view the market. So you put yourself in the shoes of those institutional concepts, of those institutional traders. And what that will allow you to do is now already view it from a manipulative perspective. For example, with news, right? News is always written. This means that they already know what has happened and they're going to put it out 3 months later and they're going to use news to get us to believe in a different way about how the price of a certain asset will move. But we must know that it's always written and behavior of price will always show truth. You can go back and see certain news days where they are just used as moves of manipulation, where they take out liquidity. This will be taught more later into this series, but we must understand now that this is our all-in-one. I'm trying to fit in everything as much as I can for this, and so this being in our example, news always being written, behavior of price will always show truth. So let's get into a little bit more of Wyckoff now. Starting off here, we're going to go off with the two most important parts of Wyckoff, which are going to be accumulation and distribution. You'll start to see the other schemes are a form of both of these into one, but we must understand the behavior behind these. Don't just worry about how it looks. A great example of this was said from MentFX. He's on YouTube as well, but he talks about these being like a snowflake, right? All snowflakes are known to be snowflakes, but they don't all look the same, right? So we must stay away from the fact of trying to just see how it looks, trying to pattern trade from it that way, and instead focus on the behavior. So I'm going to write that down here. Focus on behavior. The reason I'm writing this down is because I want you guys to be doing the same thing. That is why this is structured in a class form, in a boring form, not so much of a form of, oh, this is super exciting. We're just trying to make a lot of money. No, this is instead what needs to be done every single time you look to trade. Focus on the behavior of the market. Don't just focus on a set of patterns. Now, for your accumulations, that behavior is going to be found in a manipulation of lows as we leave highs behind. So, as we manipulate lows, we are leaving back highs. What that means is in the form of equal highs or trend line liquidity. What this is this is traders getting into trades, getting into short trades in this case, putting their stop losses over these highs. So that leaves their open liquidity to be able to take those stop losses out at those highs, which makes the market move in that specific direction. So it is built on liquidity and it moves based on liquidity. We can use Wyckoff as a show of hand to figure out which liquidity it wants to go into. Going on to distribution, that is the same exact thing, except it's going to be a manipulation of highs as we leave lows behind. So we'll see price continuing to take out specific highs. And as it's doing that, it is leaving those lows behind in the form of that trendline liquidity. Again, the same exact thing that we talked about. Instead of shorts, these will be longs, people looking to take long trades to the upside and putting their stop losses underneath those lows. What that does is that allows us to understand where the price wants to go when it wants to reverse, right? Again, the market is 80% continuation, 20% reversal. So in scenarios like these, you don't get your accumulations and distributions too much. This will be 20% of the market. So we want to look more for our higher time frame show of hand. Where is price going to go on the higher time frames, and then use the lower time frames to allow us to see the same exact thing. But this is Wyckoff. Let's now move into the next most important part. Now, going into market structure, this will be the best way for you to figure out directional bias on a day-to-day, week-to-week, and month-to-month standpoint. So we use market structure to find directional bias. Without market structure, you can have everything else together, but that's not going to allow you to be able to figure out that direction. So you will still be pattern trading, guessing on which way it is going to go. Market structure will allow you to figure out exactly where we can go day to day on a day-to-day basis and help you with your bias as far as where to look for. I'll just go over this briefly and then we'll use this series to be able to break it off and go over market structure, go over Wyckoff, go over supply and demand, and go over everything else that we go over in a much better sense. I'll use each of those as one separate video versus just this one thing here. But market structure will allow you to find your directional bias. I use it in a term of higher highs and higher lows. So here we have our higher highs. Underneath we have our higher lows. Higher highs just next to this. And then higher lows just next to this as well. So it's the same thing over and over again. When the price is moving to the upside, we'll look for our highs that sponsor new highs. So go past previous highs, look for us to create a higher low, and then look for us to continue and create a higher high, higher low, higher high, higher low, and so on. On your opposite side, these are going to be your lower highs and your lower lows. So when you are in a downtrend, the market is trending bearish. That's when we can look for our lower highs and our lower lows. So lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows. Our job as institutional traders is going to be catching our higher lows for our long trades. So when we're taking buy trades to the upside, we are looking to catch our higher lows, and our job as institutional traders and we are looking to catch it to the downside is going to be our lower highs and lower lows. So look for your lower highs to be created, look for your next lower high, that's where you can confirm it and then take it to the next lower low and continue to find your market structure that way. That will allow you to stay on the right direction of the chart over and over again. And when I talk about the right side of the chart, I'm going to mean looking at just the most recent behavior, and that will allow you to figure out where it is going to go for that specific day, specific week, specific month, whatever time frame you are trading on. Next, going into supply and demand here, this is going to be figuring out certain areas where price will continue its direction. Now, Wyckoff, like we talked about before, will create our supply and demand. So we can use certain areas of accumulation, we can use certain areas of distribution to figure out where that supply slash demand was created and use that to allow us to figure out where price will move back into to get into a short trade for a lower high, like we talked about before with market structure, or to get into a higher low trade if we're looking to take a long for price to move upside. Supply and demand will allow us to figure out those specific areas within price that price will come back and react to and use that to be able to get into those specific trades. Now, again, supply and demand can be shown as a term of understanding how it works in the real world, meaning let's say you have some apples, right? And you take those apples and you want to get demand into those apples. So you have to lower the price of those apples in order for you to gain demand onto those apples for the price to move higher and for you to make a profit off of those specific apples. The same way as with supply. If you have too much supply of apples, you'll have to again lower the price to allow price to create more demand to come back for you to make more money on your specific apple trade. So we're using that as just a little example as well to be able to understand how supply and demand works. But supply and demand is also one that I use in my market structure and in my supply and demand and in my strategy overall. Now, as far as the next concept that I use in my strategies, I use liquidity. So I use equal highs and equal lows. I use forms of trend line liquidity. Equal highs and equal lows can be seen like this, where we create a bunch of highs that are similar to equal. This just shows a lot of liquidity over those. A lot of people who have stop losses over those, whether they're in short trades or even long trades with their stop losses over these highs that allow us to show all of that liquidity in that specific direction. So let's say we were looking for a long, we would look for a price to break structure, come back into that area of demand that sponsored it, look for that Wyckoff behavior as well, and then take that into that specific area of liquidity. That will allow us to figure out where we can take certain trades and hold them into certain areas for our areas of liquidity. Trend line liquidity as well can be also seen by a trend being formed. So let's say price is doing something like this. It is starting to move to the downside a little bit, and this forms a trend line, right? What that's going to do is that's going to create a lot of liquidity. Same exact thing as what we talked about right here with the stop losses being over these highs. All we have to do is wait for that show of hand, break of structure with that area of demand being created, show of Wyckoff for continuation all the way through into those highs. If we look at this from a market structure perspective, we can see it's just a high, a low, a higher low, and then a higher high, right? So that's all we're looking for over and over again is to see that same type of behavior when it is shown. We can also show this from higher time frame highs and lows as well. So if we have a, let's say, 4-hour or daily high that is created and that is taken out, that can be that show of liquidity. And let's say we have a daily low as well, some imbalance below, just below those. We'll look for that low to be an area of liquidity for price to take out before making its overall move. So we must use those areas of liquidity to be able to figure out when the new supply and demand is going to come in, and then use that to be able to figure out our directional bias as well as our targets when we are in specific trades. Now, some great important topics to note are that this is not pattern trading. This is multiple steps of a system to allow profitability in the long term. So you must have one before you have the other. You must have a liquidity rate before you have a break of structure. You must have a area of demand after you have that break of structure, and that allows you to form a system versus just trading, let's say, Wyckoff, or versus just trading a specific pattern. More confluence is going to equal more conviction. I look at that myself as more probability, right? So if we have more confluence, meaning every single step of our system is aligned, then that will allow us to have more conviction in that specific trade to allow us to take it to certain areas that we are looking for overall. Now, this, remember, is just the start. These are just the basics of what I have to offer. Each and every single thing that we talked over will be on a part of a separate video that we will go over each and every single one by ourselves. So it will be market structure on its own. We'll go over Wyckoff on its own as well. But we must focus on simplicity, right? This can be a lot of information, a lot of terms to be thrown at you. But at the end of the day, I want you guys to focus on the behavior of how price moves, and that will allow you to continue to stay on the direct path that you need to be on. Now, again, do not trade for the feeling as well. Trade for the system. We're not trading to just get rich. We are trading to find something that is profitable in the long term, something that you can control and continue to repeat over and over and over again. Now, if you guys want more information, do you want some free education as well? That can be found down here. Join discord.gg/leverage for the private mentorship. We have 200 students that are profitable plus in the 1% Academy through our mentorship, how we run our mentorship. And we do send out signals and trade every single Tuesday through Thursday live in the market, so you guys can be able to see the same exact thing. So go ahead and join discord.gg/leverage for the private mentorship. Yes, it is paid. Yes, there will be a link in the description just below. These are only for people who want to better their systems, better their profitability, and better their lives overall. So again, thanks to everybody who saw the video today. This is just the beginning of this series. We will be dropping one new video every single day, going over each and everything about my system and how I was able to find profitability with that. So thank you guys for watching this video today. I will catch you on the next one. Have a great rest of your day and or night, and peace out, everyone.